pleasure to introduce William O'Brien. William is FD for two biotech businesses based on Alderley Park here in Cheshire. He's also the founder of WOCO, which is a specialist R&D tax credit consultancy that he started in 2013, and he's been helping lots of clients with their R&D tax claims since then. He sits on the Bioindustry Association's Finance and Tax Advisory Committee as well, and is at the forefront of all the changes in legislation. And today he's going to share with us the current status of the R&D tax credit scheme and also any upcoming changes. We do want the session to be interactive as always. We decided the best way to do it, if you have got any questions, pop them in the chat as we go through the presentation. I'll keep an eye out and then I'll introduce you to just ask your question and interact with William. Just is easier doing it that way than having people talk over one another. And then obviously there'll be a chance at the end for more discussion. So with that, I'll pass over to you, William. Thank you.
Thanks for your introduction. Welcome everybody. I'm just going to you can see there. So you can see my slides, I can share my screen, and we can all, I'm assuming everybody can hear me okay. I was a little muffled before, so I'll try and speak up. Just going to give you a little bit of an introduction to who I am. And so my background is not as an accountant or anything like that. So I've spent 20 years working as a software engineer, as a scientist. I've worked in a wide range of businesses from, as I say, neurophysiology to Formula One team. I also worked in corporate finance and ended up actually as a managing director of a sort of medium-sized, sort of 100-person manufacturing business in the defence industry. I moved on from that and set up the WOCO business, say, quite scary to realise 10 years ago now. And that takes up the majority of my time, but I'm also the FD for a couple of biotech firms at Alderley Park. So there's one's called Artello Biosciences, which is actually an American listed company with a UK subsidiary, and Conics Limited, and they're sort of both R&D heavy firms. So I sort of do a lot of work with them, and so I'm both helping people make their own R&D claims, but I'm also actually making fairly regular large R&D claims on behalf of companies I actually represent. As I say again at the bottom, I'm not an accountant, so don't take anything as law from me. Always rely on the accountants as well. I always work generally with accountants on this kind of thing. And as I've said here, it's of interest to say I sit on the BIA's Finance and Tax Advisory Committee. So the BIA is a bioindustry lobbying group, and they've been really influential with getting changes made to the R&D tax credit scheme over the years. And they tend to get booked by the Treasury quite early in the process when there are new changes to the R&D scheme. So I'm not going to claim much credit because they don't always listen to us, but it means I've been involved at a reasonably superficial level. But I've been talking to Office to Life Sciences, Treasury, and HMRC on some of this stuff. So hopefully, I've got a reasonably clear idea of which things are going to happen, which things aren't. And I'm hoping that this will be of interest to you. But what I want to cover today, here we go, just a little bit of information about the R&D schemes as they stand at the moment, and a little bit of the statistics that have been recently published. And then there are a number of changes to the legislation planned from April next year. 3 broad areas that they're allowing, a few more costs to come into R&D claims. There's a big change to focus the claims being allowed for UK work only, in theory, but with certain exceptions, and some new anti-abuse compliance measures. I'll also say, in case anybody hasn't noticed the news lately, there's a lot of stuff changing in tax at the moment, day to day. At least one of my slides has changed about 3 times in the last week. So again, I hope beware when we're actually going ahead and doing this stuff. I am assuming, again, I'm not seeing much feedback on the screen here, but I'm assuming you've all got some basic outlines. Now, I'm not going to be sort of describing the basics of the R&D tax credit schemes. I think generally most people are familiar with them these days. Obviously, happy to talk to people separately if there's interest in that in a bit more specific detail. But really, I just want to sort of focus on what's changing and where we are. Just very quickly, though, we'll give you my sort of what I mean when I'm talking about the R&D tax credit schemes. So there are two main R&D tax reliefs that we're interested in: the SME R&D tax credit scheme and the R&D expenditure credit scheme. So they're the different kinds of companies. You've also got the patent box scheme, which is tangentially related to this. And HMRC assess claims based on the so-called gateway tests, which are: was there an advance in science or technology? Was that advance achieved by the resolution of uncertainty by competent professionals? And do we know where the R&D started and finished? If you probably can't see it from there, but let me put myself out of the way. An exciting read there if you ever really want to read it. The CIRD, that's basically what we call the BIS guidelines. That's regarded by HMRC as pretty much the gospel when it comes to R&D tax credits, what's allowable and what's not. That's pretty much all I want to say about the detail of the schemes, other than where we're going to talk about specific rule changes. So I hope that's okay. So where do we stand at the moment with the schemes? Like I say, just check the BBC website, and there might be something new coming up this afternoon. One of the things, and I'm obviously sitting in an interesting position in this, so I'm, as an R&D tax credit advisor, I've no doubt that many of the people here today will be approached by people constantly. There's quite a reputation for people doing the line of work that I do, and there's a big perception that the schemes are maybe not as effective as people claim for money they would have spent anyway, and the perception of abuse, it's highlighted by dodgy advisors putting in claims for all sorts of things that really don't count as R&D. So widespread is that sort of perception that the National Audit Office for the last year or two has qualified HMRC's accounts because of unknown amounts of fraud inherent in the R&D scheme. So this is really getting HMRC's attention at the moment. They're obviously, I don't think this is the only thing that's causing their accounts to be qualified, but it's one of the big ones. So what we saw, and again, I'd be quite interested to hear if anybody got any of this themselves, but there was a big campaign during the last year where HMRC wrote to quite a few thousand companies, basically accusing them of fraud and saying, we believe your R&D tax credit claim is not legitimate. So it was much more aggressive than you might normally see if you're putting a legitimate R&D claim in, and HMRC said, we'd like to open an inquiry, we've got some questions, or we want a bit more detail. This was a lot more aggressive, and I think it was because they've been stung by this criticism by the NAO that they really needed to do more to address so-called fraud in the system. And what was interesting to me was, firstly, that they actually used the word fraud in the letter, so it seemed to be sort of prejudging nearly all the claims. And again, this is hearsay, I don't have any official sort of information, but they were going after what looked like very small claims. All the ones I heard of were sort of less than a few £1,000s worth of R&D tax credits. And for a few weeks, HMRC actually paused all R&D tax credit payments to everybody, because they were obviously concerned there was something going on and there was some systematic fraud in the system. And it seems to me that there were people maybe trying to play the system, working on the basis HMRC is pretty poorly resourced. Most claims go through without anybody really looking at them that closely, and if you put something in small enough for a few £1,000s and you do that enough times, there's a lot of money there. So that seems to be what happened. That pause by HMRC only lasted a few weeks, and actually all the claims I put in during that time still carried on coming through. So it was obviously they were looking for something quite specific. Anyway, well, I'll come back to that, because what's interesting is the way they were going after all these very small claims. And then finally, in terms of where this has changed, those of you who may have made claims recently will be aware that they put the first attempt to tighten up the scheme for a number of years in place that came into effect this year, which is the cap on payable credits to small companies. So there's already caps for the large company schemes, but for SMEs, there was a cap based on how much payroll taxes are paid by the company that limits how much of a payable credit a loss-making company can claim. And this was ostensibly put in place by HMRC because they were worried about a particular kind of abuse of the system where companies were bringing in money from offshore and then effectively funneling that money back offshore again to do the R&D. So none of the money actually hit UK companies, but they were on the way, they were claiming big UK R&D tax credits. Companies like that, these sort of so-called virtual companies, often didn't have any employees of their own, so they wouldn't have a P or PAYE bill, and therefore, this cap would catch them. I think there's been a huge number of unintended consequences, and that was the first part where I got dragged in by the BIA, where the Bioindustry Association identified a particular thing in the pharmaceutical industry where there's lots of companies, legitimate businesses, including one of the ones that I'm involved with very heavily, where you have very few employees of your own, you raise your money from investors and so forth, and then you use professional contract research organizations, external scientists, research groups, universities, all to do the actual work. And they were all going to be, mean they couldn't make R&D claims. So an exemption did get put into the legislation relatively late in the day to allow certain kinds of work to be allowed through. Still waiting to see just how effective that exemption has been. I've made 3 claims so far where the exemption was claimed. I'll be interested to see if there's any sort of follow-up on it.
William?
Yes.
Sorry, there is a question from Jane Godfrey, which I think is probably quite relevant. Jane, I don't know whether you're available just to expand on it. It was just about the timing and delays on the claims.
Mm-hmm.
Yeah, definitely. Good afternoon, William. Nice to meet you. I've been doing R&D claims. I work as an external FD for a number of companies, and I've been doing FD claims for about the same time as you, about 10 years. I have never seen the level of confusion that we have currently. I've had 2 claims for the same company in April this year, and as at this morning, when I do my normal bi-weekly call to HMRC, they have no idea where it is. They have no idea whether it's processed. They have no idea when it was being paid. They think it's been accessed, but they're not quite sure. And astoundingly, they've paid out on the same company on a claim which went in 6 weeks after the one that they've lost.
Yes, that's not uncommon. It's interesting because probably, you may remember better than me, maybe a couple of years ago, there was a massive slowdown in claims. They really hit a capacity problem. It was particularly bad on RDEC claims because the SME scheme, they have in theory, they have a turnaround time they're supposed to meet. So they tend to focus on doing the SME claims first. And I had RDEC claims going 9, 10, 11 months with nothing wrong with them. No, obviously, the claim, these things can take years if you get dragged into an inquiry. So you're never completely sure. And HMRC can always be a bit cagey. If you phone them up and say, where's that claim? They're not going to tell you if actually they've got someone looking at it because they're not happy with it in some way. So the first you'll hear about it will be a notice of wanting further information or opening an inquiry. But I have to say, I've seen it slowed down of late. I think they've been shuffling resources around at HMRC onto this anti-fraud and compliance and enforcement side of things. So you may well see it slowing down. But they tend to publish, I don't know if there's an email you can get signed up to from HMRC where they will update what the current turnaround time is. And that's quite useful when you say, has my claim got lost or are they just being very slow? And if you look at the turnaround time, they will normally say, we've currently processed claims up to the end of April or something like that. And you can sit there saying, well, my claim went in way before that, therefore maybe there's a problem. And equally, if you haven't looked at that, and they'll just send you straight back to say, well, we haven't looked at anybody's yet, so hold your horses.
At the end of August, they said that my claim was on the green list, and they were currently doing the claims which had come in the same week as mine. And the comment that they made this morning was there is now no such thing as a green list. They withdrew it a fortnight ago. And so they now have no visibility whatsoever.
You don't expect to end up thinking in HMRC.
Yes, it's got RDEC and SME claim on the same one. And this is what I think it might be more of a problem.
Yes. I can't add any great insight other than the fact that they are well focused on this. They do understand that it's, you know, although they will reserve the right to take as long as they like making inquiries, they do understand that it's important that businesses get paid, you know, as quickly as possible. It always used to be a little bit of a tricky one to chase, because one of the rules for the HMRC schemes are that you have to be a going concern. And you can't be a going concern purely on the basis of an expectation of an R&D tax credit. So there was always a bit of a problem if you were to chase HMRC and say, we're going to go bust if you don't pay this R&D tax credit. And they turn around and say, well, I'm sorry, you're not eligible for it then. So it's always been a bit sort of reluctant to chase them by sort of saying it's existential for the company. But yeah, well, it sounds like you're doing all the right things on that particular front, however.
Thank you.
So I'll move on a little bit. So that's sort of my understanding of where we are at the moment. To talk about the statistics that were published just a few weeks ago. And as I said, these are most interesting in years. That's probably for a little of an exaggeration, but when you're sort of a bit of a nerd on this stuff like me, you look very closely at all the numbers coming out of HMRC. And every year, if you look at these statistics, the claim figures have gone up every year, and the cost of the scheme to the exchequer has gone up every year for as long as I can remember. So this year, the number of claims went up again 7%, but the total cost came down by 4%, and that actually meant a 10% average decrease in the cost of claims. It seems to be the most likely explanation is COVID. So HMRC can't claim credit for having suddenly got really aggressive with their sort of anti-fraud crackdown, because these figures are from before they even started that. The other thing that's interesting, as I sort of alluded to, whether we're going after all these small claims, by far the largest number of claims was less than £5,000 worth of claim. But when you look at, they sort of published the value into the total value, how many billions, if you like, the claims of that size were worth. And the ones, although there was the biggest number, the ones less than 5k were almost negligible. So it does make you ask, what on earth is HMRC doing targeting these tiny little claims, when if there is any abuse, it's much likely going on much larger claims. So I don't really know what they're up to. And then the really interesting thing, and the thing that got me excited about this, was that every year the ONS publishes, alongside the HMRC statistics, their own idea of how much R&D they think has been done in the UK. So they do a survey, it's called the I forget what, the Business Enterprise R&D Survey, something like that. And again, for years and years, that's always been miles smaller than the figure that HMRC says. So they have a figure which is based on the amount of tax credits we've paid out. This is how much R&D spending was accounted for by those. And it's been running at about a sort of £10 billion difference for quite a while. And that's been one of the really strong bits of evidence that's been thrown at HMRC and thrown at the scheme in general to say, look, these, you know, the ONS, the respected body, they know what's going on. They looked at real R&D, and somehow HMRC, you know, people are claiming for a whole load of other stuff on top. What happened this year is the ONS went back and thought, you know what, we want to understand where that difference has come from, because it does seem quite big. And they went away and actually just realised that the problem was that they weren't talking to SMEs in that survey. Literally, their survey involves talking to something like 2,000 large companies, and when they started doing the survey, R&D was nearly all focused in large businesses. Sorry. And of course, one of the big effects of the HMRC schemes has been to incentivise small companies to go and do more R&D. And there's this, so they published a slide. I don't know if you can see that very clearly, but you've basically got the blue line I'm placing here is HMRC's line over the years, and the lower line is what the ONS used to say was their idea of the R&D. So you can see it varies sort of 10 to 15 million pounds difference. And this other line that's now running neatly alongside is their revised figure, based on going back and redoing their figures over the last few years. In fact, as you can it's even switched around. So now HMRC is actually underestimating R&D compared to the ONS. So that's fascinating to me, and it will be interesting to see what sort of an effect that has on their thinking about where fraud is, and more importantly, when you actually look at the size of fraud that the National Audit Office is identifying, it was never anywhere near this 10 billion. But again, it led to this perception within government and within HMRC that this was a much bigger problem than maybe it was. Okay, so I'm going to shift on, start talking about some of the forthcoming changes. I apologise, I'm taking a bit longer than I expected to get through this stuff. So there are 4 areas that there's some new rule changes coming in, and they're going to be coming into effect from 1st of April 2023. This is a nice new feature of the new changes to the rules. When they used to change the rules of the scheme, it always used to be that that they would bring them in on the 1st of April of a particular tax year. You'd then have to account, for the old rules before that date and the new rules after that. So if you had an accounting period running between the two, it was always a bit of a headache. For the PAYE cap and these new rules, it's only going to apply once your accounting period gets started in the new period. So you'll always have a whole period under one set of rules. So that gives you a bit more leeway when the changes will happen and affect you. So these ones are relatively simple. We're going to add the ability to include cloud computing costs and data sets. As the world of particularly software development has moved to using things like Amazon Web Services or Microsoft Azure, there's been a bit of a disconnect over the last few years. If you are spending a load of money on hosting a test system in the cloud, none of those costs have been allowed in R&D so far, because they treat that as like a rental cost and therefore specifically excluded. Same goes for data. So if you need to buy an expensive data set in order to conduct your R&D, that wasn't allowed because it was specifically excluded. And there was an exemption for pure mathematics. I'm not entirely sure how often that was really used in businesses, but somebody's obviously decided that I'm guessing for sort of AI type R&D, that was significant. It's very welcome that they're finally keeping up to date. I can't imagine it's going to make the slightest difference to the total level of figures in the scheme. But if there are areas that your businesses are involved in, you'll be very pleased to see that. Right. Big one is, and again, I don't know how many of the businesses represented here today think about or conduct R&D overseas. But this, as I said, this is something HMRC is seen as a problem. The UK scheme is more generous than nearly all the sort of comparable schemes around the world. So it's the US, the Australians, the Irish, who are often sort of cited as competitors to us. They all insist that the money, any tax credits benefit the country itself, which is fair enough. So they're now going to require you to only claim for work that was conducted in the UK, except for what they call qualifying overseas expenditure, which I'll come to in a minute. UK, sadly, I did ask this question, but with VAT, we talk about these legal definitions of the place of supply, which often is the UK, even when something's done overseas. And unfortunately, that's not going to apply. It is where the work is really done. So this is going to be quite challenging for companies who want to use a subcontractor to do some of their R&D. You're going to have to get into quite a bit of detail with them to understand where they are doing their work. So if you've got a firm that themselves has some employees in different subsidiaries overseas, or if you're subcontracting to an offshore company that has a UK subsidiary where the work will be done, so you're going to have to get to know a little bit more and actually potentially have to know things like the PAYE numbers of your subcontractor. So it's going to be a little bit more invasive. There's something similar for EPW, stands for an externally provided worker. So when you've got a subcontractor working for you, it's an area where the wording is very vague or very confusing. What most businesses call a subcontractor, the tax rules call an externally provided worker. And they're going to, again, only be allowed to be claimed for if they are themselves subject to PAYE in the UK. So what are the exceptions? And this is where, as I've said before, the sort of committee I'm involved with, there's been a lot of conversations, is exceptions will be allowable. You will be allowed to claim offshore work only if it's necessary because of these geographical, environmental or social conditions not present or replicable in the UK. And that's a hell of a sentence to play with, and obviously it's not made as legislation yet. But some things are obvious. If I'm doing a piece of research that requires me to dig for a particular mineral in a particular country or something like that, it's kind of obvious. It's one of the things that you're not allowed to claim is that just because you can't afford to do it in this country, that's why you're going offshore. So that's obviously one of the things they're trying to stop, is to sort of have sort of lower cost offshore labour doing the same sorts of things that could be done in the UK. And there are examples, and I can think of a few, and clinical trials is one that comes up a lot, where in some cases companies are required to conduct a clinical trial in a particular country in order to be able to get marketing approval in that country. So that's an example of something that you would have to be doing it in a particular country. What's going to be interesting, and probably the subject of lots of arguments over the next year or two, is sometimes it's possible to do it all in the UK, but it can be done to clinical trials. And I'll tell you that I'm involved with is running a clinical trial now for cancer anorexia treatments, and finding the right kind of patients with the right kind of cancer who are willing to participate in the trial is really quite difficult. There aren't many of these people, and they're all really poorly. So we started in the UK, and then we've had to go offshore. We're in Norway, we're in Ireland, and we're looking at Australia, simply because otherwise we'd be years trying to get the data necessary for doing the trial. And we've asked that question, and the answer is that would probably be justifiable, even though you could, in theory, get there in the UK eventually. Another one that's going to be also contentious is if you want to work with a particular team of, let's say, a scientific research team that are experts in a particular field, typically they're your workers on the project. If there was a UK research group in a university that had the capacity to do the same research, should you go to them instead of the offshore one? I don't really know, is the honest answer for this. So it's going to give big headaches, potentially to only a small number of companies, but this is really the attempt to crack down on this form of abuse. The other thing that I think will be also potentially might change is the PAYE scheme, which has given headaches to there's been a lot of unintended consequences of that. A lot of businesses affected by that have nothing to do with offshore-based abuse of the R&D scheme have been caught up. So effectively now the HMRC has brought in another scheme to address the same form of abuse. Will they maybe, reduce the burden on companies with the PAYE cap? I'm not holding out too much hope, but it could well be something that allows them to take a bit of a step back from something that's proving administratively quite challenging, for not really any improvement in the anti-abuse, because it never went after the particular problem, which was money going overseas. HMRC have said that if it's about speed to market, if you're going to run out of cash before you can do the overseas work, they probably will allow that through as a criteria. The question is going to be how strictly this is interpreted. If we're hoping that HMRC will provide some much more detailed guidance as to what's allowable and what's not, so that you don't become sort of beholden to the will of a particular tax tribunal and what their particular interpretation happens to be of whether something was necessary or replicable. But they are. Yes.
Sorry, I hate to go mid-flow, but there's a question here from Paul Zanos, which is a pretty relevant question to what you've just been talking about. Paul, do you want to just pose that question?
Hi, thanks. So if your business is UK based, but you have a branch in any country really, so it's not externally provided workers, quote unquote. So it's the same company, just a different country. Would that normally be considered an exemption and therefore within the scope?
No, they will be, unless there's a particular reason why you have to use your offshore employees within the same company, that requirement that the work is done in the UK will apply. So yeah, that could be, you might be able to make the argument that that particular team, that particular product team isn't here, it's in America or it's in another part of our business. But yes, as far as they're concerned, it is obviously would be in a separate company. Presumably you'd have multiple subsidiaries or something. And there are slightly different rules when the businesses involved are connected. So, one owns the other and so on. But no, it is going to be a headache for multinational companies. They're going to have to think quite hard about which employees are doing particular bits of work. So not great news, just a little bit more hoops to jump through on those sorts of things. Does that answer your question?
Yes, thank you.
Okay, so moving on from the offshore restriction, there's then a few additional sort of bureaucratic changes, again, to try and address what they see as the abuse and the compliance issues. So the first one is that they will be requiring all R&D claims to be digital, which is a little bit of news to me. Most claims I thought were digital anyway these days. They're going to require some extra information goes in with your claims, which if you've been, any claim I put in includes this information anyway, as a matter of course. Nearly everybody I've ever seen putting in a respectable R&D claim would include the information they're asking for. So I think there'll just be a few extra boxes. There's a new tax form called the CT600L, which is the extra information you need for the R&D tax credit. I think there'll be a few more boxes going on that to talk about a bit more of a breakdown of your cost going into the claim. And then there will be additional sign-off required by a senior officer of a company.
Speaking.
These are both measures to avoid problem where people get approached by sort of, dodgy consultants to say, I can get you a load of tax back. Don't you worry about the details. We just sort of do whiz with HMRC and you get a big fat check and we take a cut of it along the way. And then people have no idea what was sort of done in their name. So I think they're looking to do that. It's a bit odd because every tax return, if you as a company put in your tax return, the directors are putting their name on that tax return. And if you don't understand what's going on in tax return, then you're not really meeting your duties as a director. But they're insisting there's going to be an extra signature on all of these claims. And the big contentious one, and again, this has been argued about endlessly, and where we are now is that they're going to require you to make a pre-notification of any new R&D claim. So assuming you've never claimed before, if you've never claimed in the last 3 years, you will have to tell HMRC, and it's usually you have 2 years after the end of the tax period to make your claim. So that's no longer going to be the case. You have to now tell them you're planning to make a claim 6 months after the end of the accounting period. And we can count ourselves lucky because the HMRC's first draft had it, you had to notify within the accounting period, which was obviously nonsense because the definition of R&D is it's uncertain. I don't know if I'm doing R&D. Still I've done it in some cases. The legislation is written in such a way that HMRC will be able to change what they ask for without going back to legislation for it. We're rather at HMRC's mercy on what they're actually going to expect to see. As I said, when existing, so if you're already claiming, and I think it goes back 3 years, then you don't have to do this, and just the old 2-year deadline is still in force. Right, now my next slide is, oops, wrong button there. Sorry, my next slide has changed a couple of times. So I was going to say that national insurance contributions are going to be extended to include the new health and social care levy. So that's the new tax that was going to be introduced, and unfortunately not anymore. So we don't need to worry about that. And the other comment, this is rather than a legislation change, this is more a comment on my part. Corporation tax rate wasn't going to change, and now it is. Something that we've seen, again, if you've been involved in this over the last few years, during a period when the corporation tax main rate came down, so it came 23% down to the current rates, every time they did that, there was an adjustment in the payable credit rate for the R&D SME scheme to increase it to match the fact that to match the value of the tax credits between loss-making and profitable companies. So as the corporation tax rate came down, they did an adjustment so that the payable credit rate went up. And so it went from about, I think it started something like 9.5%, and it ended up at 14.5%. So now the corporation tax rate is shooting back up to whatever it is, 25%. They don't appear to be making this corresponding adjustment, but I'd watch out for that. That could be an interesting sort of stealth way of reducing the cost of the credits to the exchequer. There's one to sort of watch out for. And then a few very small, relatively trivial things. There's been a bit of a weird issue where if the company transitions, so a company starts being an SME, during a period they become a large company, so they're they go more than 500 employees, or their balance sheet, they raise some money and their balance sheet gets too big. There's always been a year's transition in that process. So they get a year where they can carry on as SME before they then have to go under the RDEC scheme. But up until now, if that company's within a group with any other businesses, all the other companies went to large company scheme right away. So there's a bit of a weird scenario that you could effectively acquire a company that suddenly went large and the whole group would go bang out of the SMA scheme in one go. So they've addressed that to allow the transition to work across all the companies. Another very minor thing, which actually HMRC has been doing in practice as far as I could see for a while, but if you have a claim rejected by HMRC, so they decide after an inquiry that you're not allowed to make a claim under SME rules, quite often that's because HMRC's decided your work was subsidised, or it was a subcontract or something like that. So you would have been allowed to claim under RDEC, but perhaps by the time the inquiry is completed, you've gone past the 2-year deadline and you can't do it. There's a specific allowance now to let them restate your claim as if you'd done it right in the first place. So whenever I've seen this happen, the HMRC have allowed you to do it anyway as part of the sort of negotiation at the end of an inquiry. But it's quite nice to see they're formally recognising that, so you don't completely lose out if you find that you disagree with HMRC on whether you were qualifying or not. And then last one here, there's a few more powers. Again, they're going after the enforcement. There was a bit of a again, it's getting very technical, even way over my head as to how these things work, but they were restricted in the way they could go after you and how much they could claw back if the problem with a tax claim was that you'd received a payable credit or a payable RDEC. And they're getting rid of that issue so that they can treat you as if you'd as if you'd got the tax wrong for any other reason when they're coming after you for deciding they don't like your claim. So just a few things to leave you with as to what can you do practically. What does this mean for you? So I'm hoping some of this has been relevant to some of you. It's hard to know. Some of these are quite obscure bits of the scheme. Obviously, to someone like me who lives and breathes it, I'm going to run across this quite a lot. First one is, when the pre-notification comes out, don't wait. I don't see any downside of saying, I was going to claim and then I've changed my mind. I'm not going to. The only question will be how much information HMRC is going to ask of you at that sort of 6-month point about what your claim is going to be. Hopefully, they will just ask you to tick a box to say, yes, I'm planning to make a claim. Because if they're asking you to actually effectively make a claim to say, I'm going to make a claim, then you might as well make the claim. So I don't quite know what it's going to look like, but assuming not, there will be very little reason for a company who thinks there vaguely might be a claim to just put in a pre-notification until HMRC finds that they're going to get overwhelmed with people pre-notifying and changes their mind about how useful it is. Look at your offshore and development work you might have planned, and thinking of the question we had about, even within the same group where you've got employees in different places, what you might find. So I just had someone ask me a question directly. The pre-notifications where HMRC are asking you to tell them in advance that you're planning to make an R&D claim, and this will be 6 months after the end of the accounting period. So maybe I'll say review your offshore contracts, because if you've got, a lot of companies they might have a team of software engineers, for example, based in Eastern Europe. There's a lot of companies work that way. By losing any tax credit claims that you would be able to make on that, you might find that the difference of what what the extra cost is going to be on your existing arrangements, plus the fact you will now be able to claim potentially an increased R&D tax credit on a slightly higher UK-based company, it might soften the blow and make it worthwhile bringing that work into the UK and keeping things a bit simpler. One last thing, this is a sort of heartfelt plea from an R&D tax credit advisor who's getting sick of HMRC thinking we're all a bunch of cowboys out there. Don't let people do claims for you unless you really understand it. I'm staggered. People just say, "Oh, I'm assuming it's right," and I'm taking huge pains with my clients to say, "Don't take my word for it. Don't just because I've told you this is what I think your claim looks like. If you don't recognise your business in the what's been written, don't agree to it. I'm trying to reflect your actual business. But if you're inquired into, or if you're fined, they go after you, the company. They don't come after the advisors like me. I mean, they do also go after the advisors like me, but that's a separate sort of issue. For the companies who are left behind by people who put in claims that they shouldn't have been put in, you know, the onus is on you to really understand it. And, you know, there's no sort of shortcut there, you know, to just making sure that if someone's trying to tell you it's too complicated, it's all a bit technical, don't worry about it. That's a red flag for me. I would really make sure that you're comfortable. And you get, you know, there will be, with HMRC introducing this new extra sign off and these new steps, they're going to obviously, they're throwing a lot more people at this enforcement. So there'll be early test cases where people are picked up for it. So again, don't let that be one of you. So, where's my last slide gone? So I hope that has been of value. And just one last thing, this has not been intended as a sales pitch for my business, but just to put a little one at the end there, if you do want to talk further about, you know, just the nuts and bolts of some R&D claims, you're always welcome to just drop me a line. The way we work, we don't charge you unless we've actually done a piece of work. So there's always happy to talk to people about, is that viable or not? And are there any questions now that we've saved it to the end? I know we've taken 3/4 of an hour so far, but hopefully interesting.
Perfect. William, thank you so much. So we have got a few questions. Catherine Wilson, I had a question. I don't know whether you're there and want to expand on your question, Catherine.
Yeah, I was just wondering if you could expand a bit on what the exemption looks like for the pay-as-you-earn cap, because we're quite heavily restricted by that. So
right, so pay-as-you-earn, so not the one I was talking about, not the one for offshore expenditure, the one that's just come into force.
Yeah.
So that is, you're allowed to claim if you are working towards creating a piece of, I have, you know, again, I don't have legislation rule words in my head, but it's creating registered IP effectively. So if you are working towards something that will result in a patent, a trademark, I think a breeder's rights, there's a list of specific kinds of IP, or something that, if you're working in another country, that would be an equivalent to these pieces of IP. I don't think you have to actually, if you could be working towards something that's, you know, like a sort of trademarked, copyrighted piece of work, so your own piece of IP, then you generally can make the claim. So it's quite a broad exception. If you're building your own products, you usually would come into that. If, on the other hand, you're doing work for other people, so it's not your IP, you're not owning it, then it's more difficult, and that's what they're trying to pick up with it. So people who are really middlemen or service providers are the ones that they're trying to get. So if you are developing your own IP, again, you need to read the detail of the rules. You don't have to necessarily sort of show them. I'm trying to just think of them. The only one I've really done this that really mattered was Artello, which is again a early stage R&D company. It's raised, you know, many millions of pounds. It's never sold a thing so far because it's developing new drugs. So it's all about, you know, this. And they've only got four employees, and the rest are, you know, actually UK based, but in lots of other companies. But they have a whole ton of patents, and they're working towards developing a named drug. So they meet the requirements of the exemption quite nicely. Obviously, I don't know your particular example, but it's experience so far is that if you are genuinely developing your own thing and it belongs to you, you're probably going to be okay. It's the ones where you're slightly more artificial looking structure that you might fall foul of it.
yeah, so the structure of the group is that our IP sits in the standalone company, so all employees are somewhere else, but we are continually developing the IP in that company. We ring fence it for that purpose.
Yeah.
So
Probably okay there. Again, obviously can't speak to your detail, but where you've got the sort of a group of companies and the IPs in one and the employees are in another, there's usually ways of being able to cover that. That's not too much of a problem. Yeah, should be okay.
okay, thank you.
Perfect. There's another one from, I don't know the name, Tal Billis. Is that you? Anyone? About a...
It's me.
Yeah.
That's me. Yeah.
Thanks.
Okay, actually, I had a follow-up on what you just said before, but with just a quick question. We've had a claim in for 8 weeks, 9 weeks now. And we had a piece of paper, so I'm not familiar with this particularly, we had a piece of paper come in, looked like a receipt, had the amount that we claimed in. looked like a receipt. And so we thought, okay, they're going to pay the money in the next few weeks. And I spoke to them today and they said, oh, well, that's just some automated something that we send, and that, yeah, so you've got a little one there as well. So, it's just an automated something, and we don't know when you're going to get paid, but it's in process, is all they told us.
Yes, it's automated. That's the generally that kicks out to the system when they processed your return.
Right.
Then, if it was a first-time R&D claim, or if it was claiming a payment, then they do tend to get, before you get to that stage, it will have been, if it's going to be checked by a human being at HMRC, it will generally happen before that gets spat out. So then you have a process. Once you've had that, and again, I don't know, was it a loss-making company generating a payable?
Yeah, loss-making generated a claim, quite a large.
Was it the first claim?
No, we had one successful.
So if it's not the first claim, it depends on the size. Obviously, they can pick them out. They have computer rules that will look at the size of the claim made to things like look at the balance sheets.
Yeah.
If you appear to be claiming every single one of your costs, or you're claiming more than the cost on your P&L as R&D, then they will flag that. No. But look, they talk about sort of security checks before they make the payments. So some of that was this process I talked about right at the start, where they've done this enforcement, where they shut down payments. So they didn't stop processing claims, but they stopped making the payments. So sometimes, I'm trying to think of examples where I've seen it get slowed. Sometimes just things like the bank details don't match up.
Okay, but usually it means they've processed it and it should be coming.
If it goes longer than, I'd say, 4 weeks from having that, then you've got a case you've got to chase them. It shouldn't, I wouldn't expect you to have that and then get an inquiry saying, actually, you know what, we've got to question the whole thing. Again,
no, I mean, they gave me some BS about, oh, it's in process, whatever that means, but I didn't really understand.
Most of these things are anti-money laundering, where they can't tell you what they're doing. They can't tell you, we think this is, we think there's a fraud here and we're going to investigate it. That's
I mean, they indicated, because we have a nominee, so we borrowed some money against that, so we have a nominee payment.
Right.
So maybe
that's very likely to be what's going on there. Just
checking. Okay.
And also because you've sort of advance funded the R&D. There are, again, some of the more dubious names companies, or well, maybe I'm slandering my fellow R&D agents, but I would never collect the money on behalf of the client. I would expect them to get the money themselves and then they pay me.
Yeah, no, that's fine. This was not a dubious company. Just a very, since I've got, maybe go through other questions. I was just saying on the R&D, on the PAYE one that you mentioned, on that exemption, is an exemption on where you outsource the work to. For example, if you're creating patents, and the patents will be held in the UK by a UK company, but the people that are doing those work are in another country, and we have engineers in another company who are developing that, but the IP will be held by the UK.
You're okay now until the new offshore rules kick in.
Oh, yeah, sure, I understand that.
Yes, it's the company that's making the claim. It's you have to look at the wording in the law.
Okay.
It's worded. There's quite a lot of wiggle room, and you don't have to turn up and say, here's my patent application to prove that this is what I was doing, because you could be working on something that you hope will result in a patent, but that could be 4 years away. You can still claim right away. They might come and question what you're doing and want to look at it, but you don't have to provide evidence. I mean, if you did it for 10 years, so that I'm honest, there's a patent coming soon, then they might come and
it's not a very good patent then. Yeah. Okay.
Yes. You can include like copyright and trademark, so they're almost I'm going to make a trademark product called WOCO's phone charger. I don't know, looking at random things on my desk, and in theory that would, if there was R&D involved in that would probably qualify.
Okay, that's good. Thank you.
Brilliant, thank you. We've got Adam Grant, who's got a question.
Adam.
Is that Adam?
Hiya. Hello. I outsourced my claim to a third party, and I actually asked them last year whether I could, because I was, I heard all this news and I was getting worried about what was going on, and I was worried being too racy, and I actually asked them, can I go to someone without claim, a third party, to get them checked and audited, so I get someone else's opinion before we submitted the claim. They weren't. They did not like this idea, and they weren't able to come up with a plan to actually deal with my fears. So I let it go. Have you heard of such a service being done before? And
not, I mean, I do it all the time and check over people's claims. Usually when I'm taking over from someone else, and I'll just see what they've done. I mean, the claim is yours. Not with, I'm assuming you're talking about a company like mine that does R&D for you, charges a percentage of whatever you get.
Right.
It shouldn't be. It should be all transparent, because it's your numbers, your company, and in theory, you've presumably given. I will sit down with the technical people and interview them and come up with my spin on what they've said and frame it in a way that I know HMRC like to see. But it's almost as I didn't say that, and I'll change it. I'm not going to say, well, I have to say this to get the claim through. I suppose I've seen some of the companies, again, I'm sure you're not going to say who it is, but some of the companies get quite jumpy if they've signed people up for multiple years and they worry they're going to lose the client to someone else. Because usually, and again, without obviously, this happens as part of the switching advisors, where you look at somebody else's. You pay someone, like in my position, a consultancy fee to go and look through your claim. I'm usually very reluctant to get involved in a claim that I haven't done from start to finish. If I haven't sat down and gone through the whole analysis process that your advisors have done, it's difficult to really put hands on heart and say this is okay. So that might be where that's less likely the reluctance on their part, more on the reluctance of anybody who wants to check it. And just to sort of finish the thought off, usually what I find, and it is, so I'm not an accountant, so therefore I'm always working with a client's accountants, and the good accountant will really push to make sure they understand the numbers. Some of them, and it can be quite frustrating in my position when I get challenged on a whole load of numbers because I didn't understand when I came with them. But if they will say, I don't understand where this figure comes from, I will give them a working and show them it, because they're the accountants. There's the one, especially when they're an auditor, they have to be satisfied that this is good. Otherwise, they're not going to be happy. And you do get people who go around the back of their own accountants, because the accountant said, I don't think you got an R&D claim. And some guy calls them up and says, of course you got a claim, let me do it for you. I'm assuming you're not in that position. If your accountants are the best people to review, and if they don't understand the numbers, you should understand the narrative. So the words of describing the work you did should be clear enough to you how they're describing that you made an advance. It was in science and technology, there was uncertainty, and there were competent professionals. So as long as you are satisfied of that, and your accountants can be they may charge you for it, but they should be able to validate the numbers for you. In most cases, I get the numbers from the accountants in the first place. They give me raw figures, and they pull figures off particular accounting codes for me to go through and analyse. So I'm going to be cautious what I say, but it would be a red flag if someone wouldn't let me crawl all over the numbers that I produced. I won't give people my spreadsheet model I used to put it together, because that's that's my IP for how I do my job efficiently. But I'm always happy to break down any figures if someone needs to see it. And I think your advisors really ought to do that, because you're like I keep coming back to, if you're inquired into, they're not going to inquire into them, they're going to inquire into you.
Okay, so, thank you.
Make sure you can stand behind it, especially if it's large. If it goes over 100,000, then you're particularly vulnerable.
Brilliant, thank you. I'm conscious of time. We've kind of gone a little bit over. There are a couple of other points here. We've got Amy, who's got a sore throat, so I'll read her question. I've never submitted the accrual R&D report prepared by Big Four with a CT return. However, it's always been available for HMRC to ask if they wish. They never did. Will the report now have to be submitted?
My response to that is, I'm amazed you've never been asked for it. Yes, they won't. They're going to actually ask you to break it down into their own format, I think. they do already have. I don't use it because I obviously produce my own format reports, but they've already got a sort of online form for submitting R&D claims that allows you to sort of put narrative in boxes and to break things out. And if there's no narrative, I mean maybe the claims are relatively small compared to the size of the rest of the company. In my experience, any claim going in with no narrative and just an R&D claim almost inevitably comes back with a question, well, where did these numbers come from? Please explain. So, it's never mandatory. The law doesn't say you have to provide a report. And with the new changes, they will be asking you to provide certain bits of extra information that you didn't before. But it's probably going to be quite high level. It's going to be, what's the total salary costs? What's the total consumables costs? What's the total subcontractor costs that go into a claim? So it won't stop them wanting to come and crawl over your numbers in even more detail than an inquiry. I suppose the thing to say is, why wouldn't you send a report? You can always put a PDF attachment onto a tax return, and it's assuming you're happy with the content of the report. I don't see any reason why you wouldn't just add it to your tax returns, just so it's on record with HMRC. So then if you do get inquired into 2 years hence, they can't accuse you of suddenly making up the report at the last minute, because you can show them that they've been filed with all your tax returns as you went. I don't know if that answers the question or not, but like I said, I'm surprised you've never been challenged.
Thank you so much, William. There are more questions, but I'm really conscious of time because we've kind of allocated an hour. But so just to let everybody know, we will be sending out an email after the session, and we'll be incorporating the slides from William's presentation, and his contact details are at the end of the deck. So if you have any further questions, probably makes sense to ask those to him personally.
More than happy to talk to anybody, ask emails, anything like that. So the way our business works, we only ever charge on a sort of successful claim. So, it's in my interest to make sure people are making good claims. And like I say, I'm sick of our industry being taken over by dodgy ones. So I'm happy to spread the sort of helpful side of the business as much as I can.
Brilliant. Thank you so much, William. It's been really informative.
And thank you very much for inviting me. I've enjoyed it very much.
Thank you. Thanks everyone for joining. As I say, you'll get an email with contact details. Thank you.